Hey everybody, hey traders, happy Friday. Welcome to the bloodbath. It is August 2nd. We just had non-farm payroll a little bit ago, and we have some big pre-market down momentum to address. So let's take a look at everything this morning. If you're coming in from the YouTube channel, if you're coming in from Twitter, joining me from anywhere, nice to have you here. Happy Friday. Let's get started. So we will see, get this out of the way. A massive move from a 543 close to a 534 open on the SPY. So that all by itself would be a percentage move of around 1.6% to the downside, with a monster gap. And we see huge gap here, huge gap here, huge gap here, and we're about to see another huge gap here. So pretty wild and crazy. Um, I am pretty interested in still buying into these dips. Same thing to do with the Qs. Looking at a pre-market at 459 to 448. Qs right here. We are now 1, 2, 3, 4, and most likely guarantee we're going to close red this week. So 1, 2, 3, 4 weeks in a row to the downside, and the Nasdaq shedding something to the tune of 10.86% to the downside. Not too shabby for a little profit taking, little cleanse, little summer melt. And just on today's gap to the downside, about 2.5%. Russell, another big fat move to the downside, with a poke high on Wednesday during FOMC, gave it all back, and we're looking at about a swing of 8.9% in the Russell. This is the market saying not so fast. The Dow finishing for the first time with a red week, and another one that's going to be shedding from high to low, something around close to 4%. So Russell down about 9% off the recent highs. Nasdaq looking to close about 10 to 11% off the highs. SPY looking to extend the losses into 5+%. So high to low, we're looking at about 5.33% for right now. If I look left on my charts, I still have some pending orders, the 450 by 445, a 420 by 415, looking to get filled on some credit spreads. I think I'm looking for like $2 and change on those credit spreads. I do have some traps running on NDX. I do have some traps running on SPX. If we are opening, let's go to the SPY here. It's almost buying opportunity time. I think if I put in something today for longer term, I think we'll be okay. But I still planned on like a 7 to 12% correction. Actually, yeah, it's about right. 7 to 12% of the SPY, and the Qs around 10 to 15%. So for a short stab, I think these are both on sale. As far as hedges go, I do have an ES hedge that is starting to look a lot better. I've got some legs down here around 5,100, and I have legs even lower than that, like 48 and 4,600. I've got some out of the money puts that will be, I mean, I can check on them. I'm just going to look and see right here. If I go to my out of the money put, let's go just one individual account. So ES 5,100 right in here. And this is out to September. If I go to this ES, this one is an out of the money put at 4,800. This one is a 4,850. So 4,800 is just a long put, and P&L wise on the day, that is way up there. This one pays like close to 20 to 1. If we see higher volatility, I'm also looking opening bells in about 23 minutes, looking at taking on possibly some puts and some credit spreads on SVXY, which is down a little bit more than the S&P, but it's a good vol play. That's about 6% from high to low. SPY, like I said, around 5.32%. That's going to extend with maybe a little bit more pressure here. So that gets us into that 7% zone. I look, I've posted many videos in this last couple weeks expecting to see some type of high, low, lower high, lower low. This would be a good spot to be looking to buy, which means anything like 525. $5.35, like right now, might be a little premature, but I am curious if I were to buy. I'm curious how expensive it is, but if I were to buy like a 5.25 call, what does that break even look like? Because if it's a 5.25 call that gets me a gap fill or gives me some, 100 delta after some type of corrective move to the upside, or I should say just stability for the downside and then a move to the upside again, then possibly a return to these highs later on. But I'll see what that price looks like. Currency strength chart wise, let's see what's going on today. I saw the Aussie was stronger. Japanese yen making a big spike to the upside. Dollar getting hit hard. Non-farm, was it good or bad? I'm not sure. Let's find out. Oh, we got a miss in the U.S. job market. Unemployment rate creeps up to 4.3%. Oh boy. I want to say this is a 0.9% increase in unemployment over the last like 12 to 16 months. That's probably not a good thing. Just saying. Let me take a look here and see if we have a print with employment numbers. Let's go labor market data and non-farm payroll. Okay, and then I want to go unemployment rate. Have a look at this. This is the edge finder here from A1 Trading. You can see the trend pretty easily. 3.45 back in January of last year, trending higher. 4.3%, zero point 0.9. We're at 0.9%. Okay, that is a big, big, big jump in unemployment over the last year and a half. Pretty crazy. Um, I don't know. I mean, this looks like the economy is certainly not doing too hot with this type of increase in unemployment. The Fed rate decision at this point probably can't come soon enough, and something tells me that maybe Powell in his press conference that he had on Wednesday, and then having no FOMC in August. Um, we're going to have to see if September's rate decision is going to save the market because right now earnings isn't enough. We had Apple and Amazon overnight. Amazon trading at 166. Yikes. So to the downside, I'm actually looking at, I've got some puts out to September. And if we are here, um, I don't mind having a 1, 2, 3 wave correction. In fact, coming back to the same support level and finding this pocket zone, I will probably start looking to protect some profit on those puts on Amazon and then redeploy some type of collar trade. I can likely close out my 210 put for full profit or very close to it because we're so far away from it now. The probability of hitting that, whatever I did collect on a roll, I could probably just take profit. So I'll take a look at that today with a collar position. Let me go. It's going to be in Schwab right here. Okay, so count, trade, positions. There we go. All right, so my put on Amazon is up around $2,700, and it's about to get a lot better than that. I have a 185 put for 200 shares. So let's do the math roughly. 185 to 166 is about $18. And with some time left in that trade, that expires September 20th. So about $18 of intrinsic value plus some time premium. 18 times 200. That should be up around $3,600 on the put to lower my cost basis from the shares that I own. My break even on Amazon is 137. If I lower it by another 17 or $18, awesome. I'll own Amazon basically at 110, which is great. Just ends up adding more to my bottom line if we do end up testing all-time highs again. So let me go, let's say 110 is my ownership price. We get back to these highs. That's an 80% move. I'll take it. Let's say that we get an $88 move. Well, if I go $88 times 200, that's making 17.6 on Amazon if we ever retest these highs. So likely going to take some profit on that position. Probably have another collar on this position. Like I said, clearing out that 210 call, which is likely close to max profit. I would assume it's got to be close if I look to close that out. So that's uh, some other stuff I'm watching to manage. I do have an interesting watch list for today. Let me see if I can find it here. Where's my notepad? There it is. So I reviewed this yesterday with my equities on demand trading room. I have some decisions to make today with Google and Tesla. Given the recent drop, it looks like Tesla is going to be an easy trade for me to close up for full profit on a bear call spread. I don't think it's tempting, but I don't think I want to dump the buying power into Tesla or Google at this time when I can save the buying power for possibly credit spreads on the SPY, the Qs. Although I do think that, Google, for example, at 166, I mean, we're barely budging. But if Google comes back to like 155 or 150, I'm going to set a chart alarm here at 155. Then sure, I'm looking to buy some more Google. But for me to just take profit, or I should say, yeah, I guess take profit on the long put and take the ownership at 190. 190 minus the long put plus credit spread, I'll be about, 75 cents off a current price. I don't know, I can probably repair this like over the month of August. I can probably repair this. But if this gets nastier and uglier, I will make an assessment on this because I could just walk away with a dollar, okay, a dollar per contract, have no ownership, and just take the profit. I could do that on Tesla, on Google. That would be adding into the mix of profits I've had this week, which would be MasterCard, Meta, Google, Tesla. I am going to take a small loss on the IWM and the Qs with some bull put spreads, and my hedges are okay for right now, but I'm still letting those play out because those are like 15 to 1 or 20 to 1 hedges. Um, and I'll let those play out through probably the end of August or September in case there's any more downside here. But I will be watching those closely. All right. So let's take a look kind of top down, just assessing as we're 15 minutes away from opening bell. Unemployment rate ticking higher, 4.3%. We had Swiss CPI came in as expected at negative zero point 0.2. If we have any medium and low impact? Nope. So nothing on the low impact that I'm really interested in. So high impact today. Jobs numbers was a big miss. We had a negative revision from 206 down to 179. 176 forecast. It came in 114. And average hourly earnings was also down and softer, as well as the unemployment rate ticking up higher. So could this be a big jump out of non-farm, or could this be because of earnings that weren't just absolutely perfect? Amazon, for example, if you look at earnings, we did have a miss in revenue by 0.4%. Apple, on the other hand, hanging in there at 215. I'm going to take a small loss in Apple with a bull put spread as well. I don't want to take more shares of Apple. Not at this time. I think if Apple's going to correct more, let's see if this will show, more correction down to like, maybe 200, and then I'll look at Apple for some potential ownership. Okay. Hope your dollar drops. Well, I'm not really in the dollar right now, but I think it likely will. If the Fed cuts, and one thing that's going to be interesting, I'll look at this right now. I didn't look at it this morning, but the CME Watch tool. Are we looking at a higher probability of a rate cut by 50 basis points in September? That's what I'm curious of. Look at this. This is crazy. Okay. I didn't see this morning, but I had a feeling that this is going to be the shift. This market now expects to see a 50 basis points cut in September, not a 25 basis points cut. Holy shnikes, right? So could we go 50 cents or 50 basis points and then also have another cut? Hang on a second. I can't get it to load. Somebody let me know if you look at the Fed Watch tool here and you go into September. Let me see if I can go to probabilities. All right, this thing's not even freaking working. Let's just go Google CME Fed Watch tool and see what this looks like. See if it'll load up properly. It's probably broken. Everybody's looking at the Fed Watch tool. There we go. Okay. So it is forecasted to be a cut in September, cut in November, cut December. But now the big probability, this is crazy. This was like an 80+% probability that we're going to cut first time in September. Now it is shifted with the Fed's going to cut by 50 basis points. So this market's not messing around. Like, come on, Fed. It's time. Things are looking a little gloomy. Um, this November, same another rate cut by 50% probability for right now. And December, another one. So if we go 4.75, 4.5, 4.25, that would essentially be a 100 basis points cut by the end of the year. That's an interesting change to things. And not necessarily for the better, but is this enough to kind of backstop and stabilize things? I don't know. Is it too little too late? I don't know. But this is probably helping the bond market in a big way. So if we take a look at SHY for the 1 to 3 year bond price, you can see here gapping up by about 30 cents. The IEF gapping up by about $1, and the TLT gapping up by $1.60. Frickin' sweet. Let's go TLT. So my bond move is looking pretty solid. I'm not selling anything against it. I've got an $82 long call on TLT that I'm trying to get closed out for around $100 or higher. If I just measure this move here, this could be an easy trade as well. This could move a lot faster than we expect, um, especially if bonds are going to be front running the Fed rate decision. That move right there to a symmetry play, if bonds are this technically obedient, I'm going to try to close out of my bond position around 105. So if we creep up here towards $100, which I have a chart alarm at, I'm looking to see if I can get something around 105. That'd be pretty good. Turn this into like a $23 credit. I think I only paid like 12 or $13 for it, so I should be able to turn a nice little profit on TLT. And yeah, that's where we're at. So look, I'm trying to tell everyone that's listening today. Number one, thanks for being here. Happy Friday. Number two, to me, this is a buying opportunity, and I'm not some crazy, ridiculous, stubborn bull. It's like, look, we've expected a correction. We're getting a correction. The market is actually offering this up. The problem is it feels awful, right? It feels awful when the market's falling because you're like, oh my gosh, Amazon missed in earnings, and the U.S. is missing in job reports, and unemployment's creeping up higher. This is the recession is everyone talking about. What about the inverted yield curve? All these things just go to doom and gloom. And if you don't believe me, let's take a look and see what Market Watch says. Okay, positive. They added 114,000 jobs, but it says unemployment rate hits highest level since 2021. That's not good, right? That's a post-COVID recovery, but not good. Okay, Chevron stocks dropped after profit miss. Intel suspending its dividend. Oh, that's not good. And stock heads for worst drop since 2000. What was that? 2000 what? 2000. Yikes. Intel. What a short-lived run that was. Holy crap. This is back to these. I mean, I was buying Intel at $24. They're suspending the dividend, which is around 1.63%, which isn't anything to get excited about. But I mean, price action wise, Intel is coming back into levels that we haven't seen since 2011, 2012. I mean, I'm not looking to necessarily say that I want to buy this stock, but a 25 to $50 rally was pretty impressive, but it's given it all back. In fact, it's actually taken out these lows that we had back in 2023. So I'm going to put Intel on the watch list and the wait list, but pretty crazy stuff. All right, let's take a look at everything else. So SPY down about $7 pre-market. Levels that I'm watching on the SPY, I think 525 is my more attractive spot. Let me go to the daily time frame here. So if we come back into like 525, way more interested, just to see if we get that 7 to 10% correction, 7 to 12% correction in the S&P. And then from there, I'm looking to reposition and see if we can come back and if we break all-time highs by the end of the year, that would be an excellent run. If we can try to get back to those highs or make an attempt to get back to those highs, okay, that'd be pretty cool. All right. But if we don't, then I'm just going to dabble with some options and probably trade some SPY, some Qs, some SVXY, some other instruments that will, get some exposure, trade some ES and NQ for some futures hedging. and that's about it. So, I mean, I'm not ready just to jump in and buy a credit spread right now. I am interested in a potential gap fill in the near term if the price is I was going to say price is right, but not to steal something from Bob Barker and Drew Carey. But we would have a pretty sizable gap, right? I mean, if we go from this level here, which is about a 1.24% gap. I mean, could we close it today? I don't know. That'd be crazy volatility if we did close it today. But I'm going to look at prices simply because if it's here and we actually go up, I'm just looking at buying something in the money. It's going to be somewhat expensive, depending on how far out I go. Um, but I do think that the deeper I go, it's worth it's cheaper than buying the stock. That's number one. It's cheaper than buying the stock. Um, but I do think that I can buy it with a high enough delta that I will essentially turn it into like a 95 to 100 delta, which gets me essentially the same stock price movement. I just pay for a fraction of the cost versus owning the shares. So options there on the SPY. Same thing on the Qs. I mean, the Qs having another big gap to the downside. This one's going to be a little bit more expensive, and there might still be more downside on the Qs. So how much more downside? Well, previous resistance here on 450. This to me looks fairly attractive for a buy opportunity, but man, the Qs could be in for way more pain if we're like not getting all this perfection in earnings. I mean the right now roughly we have about one third of the S&P that's performing okay, and now that's starting to crumble and show some cracks, and then the two-thirds is not performing well, and that's the heavy burden that the market is carrying right now with this high concentration and this narrow bull market. So we're seeing some blood in the water, that's for sure, and we're gonna see how nasty it gets. But I do have these credit spreads out there. I will price in some options this morning. Opening bells in about 6 minutes. Take a look at the Dow. The Dow is still hanging on to this level. I will be watching a trend line like so, something like that. If we can stabilize on the Dow, that's pretty good. If we're coming down a little bit more, that's fine. I think I'm going to be waiting for something like that before I get long in the Dow. Health sector doing very well. It's interesting you say that because I did put in some trades on Merck and Johnson & Johnson this week. I did some leaps on Johnson & Johnson. Got that right here. I put in, so there's J&J at 160. I've got a naked put on all my Johnson & Johnson at 140. That should be, I collected about $3.15. So, I'm willing to own the shares at 140. I think Johnson & Johnson longer term is looking pretty solid. And yeah, so I mean, healthcare sector wise, doing okay. All right. Russell, just crap. All the way down to 208. Not a bad thing. Look, I've got some good trades running on the Russell. If I get this kind of nailed down, let's go RTY. So I'm looking at it's a broken wing butterfly with a profit trap right in here. Okay. So this is the future side of Russell. So I mean, we've already made the move to the downside. If this level is coming back to get retested, we might bounce and stabilize off of that, but this is certainly rattling those bulls on the small caps. I want to see my RTY. Let's take a look here. RTY. I have an 1875 for the sell leg. That's my pin price. The 1900 by 1825. If I go to analyze this, let me see if it will show it. I need to zoom out. Where's price at right now? Price is at 2115. I'm in my credit leg, but this should actually go up into my bull. Yep, there's my peak. So if we fall a little bit more in price, I can turn this into. I collected $1.15 on this actual, broken wing. If we fall another, I mean, percentage wise, I guess I can go back to the chart here. But if we fall to 1875, which is down here, the Russell could fall another 11.5%, and I would actually trap profit for like a 10 to 1. If it stays where it is, I'll just collect the income. Um, we'll see. We'll see. And then also on the RUT profit trap around this 2050 level. So let's go back to positions. Let's go to RUT. And this one is a trap at 2100. This one is expiring at the end of August. So right now it's showing down about $100, which no big deal. I collected for the 30th expiration, collected $1.15. Profit trap around 2100. So we'll see how violent this gets. I'm giving myself a little bit more wiggle room. 2100 is a trap around another, 4% lower on the index. Yep. So that was my skip strike there on the Russell. Q's in the money. This one, force. Ooh, well, never mind. This is gonna be a big gap lower, so this one's not a problem. I had the 460 by 459. That's likely gonna expire worthless. I'll take a small loss on that by about 55 cents. Apple and Amazon, same thing. They're down enough. Those my 220. Apple, I mean, it needs to get above 220 today. I doubt that's going to happen. Amazon above 185. I doubt that's going to happen. So I'm going to take some small losses there, but I'm offsetting those with some gains on earnings. Like I said, probably the best thing for me right now with Google and Tesla is just to get out, take my dollar net credit, and move on. That'll help me wash the positions with Apple and Amazon. And then I still have some hedges out there. And I probably will look at either one, taking a stab with some SVXY today, 2 minutes from opening bell. SVXY is an instrument where it does tend to reprice and go up as volatility contracts. So I do like this instrument. From the recent peaks here that we had around the same top in the actual S&P, this is showing a move down about 15%. I'm pretty interested in this one as an alternative and a much cheaper alternative than actually buying the SPY. So I don't mind the ownership, but what I'll probably end up doing is putting in some credit spreads. And if I take some ownership on the credit spreads, that's okay because I do think this one, if we're coming back into resistance becoming support or previous level support or trend line support, all these things are happening. Daniel says, I'm already done trading this morning. Send a weekly trade report over Discord. All green days, dude. You are a stud. Nice work. And nice to do that before opening bell even. That's a big fat move already. Awesome stuff. So, all right, we're 1 minute away from opening bell. I mean, today's going to be a busy day. I mean, I'm looking at maybe managing some puts on Amazon to protect the long put, lower the cost basis. There could be some more downside. So I think if I do take the profit, I am likely going to also put in another position. Spy crossing. Yeah, we know. So everything's down. All right. So SVXY. Let me take a quick peek at SVXY. Russell getting filled for a dollar credit. Or I'm getting filled all over the place for some broken wing butterflies. That's fine. All right, let me check some buying power here. We're good on all those positions. Intel crossing 20. If Pfizer can stay above 30. Oh, look at this. Pfizer. All right, I'm going to get Pfizer called away for about $2,500 of profit. That's 25 times 8. So not a bad chunk of profit on that. So let's see, 2,500 times 8, about 20 grand in Pfizer today, as long as we stay above $30.50. I can show that right here. Let me go to all trades. Here is my Pfizer position. So I'm about 17.5 right now. And if we stay above 30.50 on the day, this should be my full profit. So about $17,500 on Pfizer. That's getting called away today. And I'm good with that. I don't necessarily, I'm in personally, I have some Pfizer shares. I'm getting the dividend on that one. I have I think I have 500 shares in my Schwab account. AT&T up towards $20. We've got some Walgreens up around 12. We got some MO that's been a nice dividend play back above $50. That's up $73,000. So I mean, there's some good and the bad. I mean, I'm essentially getting some good trades to close out. I'm managing some drawdowns here with open positions. These aren't necessarily realized losses. But let's go SVXY, and I'm going to take a look at this real quick. So SVXY 54. See what the IV is on this one. 33 trade table. All right. So if I went out 49 days on SVXY or went out to December, there should be some fills here. So if I get October, November expirations, I'm likely going to fill in the gaps there. If I go out to December, let me see here. So we're trading at 54. If I go to December, I'm going to look to collect some income on this right now. So SVXY, I'm willing to go 1, 2, 3. Actually, let's see. I mean, if price is above 55, 54, 53, I am going to with my option buying power here, that's a little rich for some of the IRA accounts, but I can probably take just one account. All right, so I'm going to do this. I'm going to go 275. Let me just add this up on the bid price. 2.85 plus 2.85 plus 1.95. All right. If there's a crazy way I can get all these legs to fill at like 10 or $13, that's pretty amazing. I doubt it though. I can just take the bid price and that's probably going to be like 7 or 8 bucks. So let me do this again. 2.85 plus 2.85 plus 1.95. So 765 is the bid. Let's see if we can get like $10. So if I took 300 shares, I'm willing to do that on my margin accounts. Let's try this one. 1235. Wow, that's awesome. Let's see. We'll go 9732. Huh. Well, those just jumped up a ton. So getting filled. Let's see. That just got filled? No, not filled. 1235 filled. Can I go similar? 9732. Got filled at 13 and change. Okay. And 911 here. That got canceled for some reason. Let's try to get this filled at 11. Try $12. I'm getting chart alarms going off all over the place, so just give me a second here. Filled at $13 and 151. Filled at 1201. All right. So I'm going to add this into the mix. I had 3 accounts get filled on SVXY. Put this in my tracker. All right, SVXY, margin accounts, naked puts. So I did the 12/20 expiration, $55 sell put for 460, $54 sell put for 390, and $53 put for 350. Let's see the difference here. I've got a 1303. So I've got a 1235 credit. $13.52 credit. $13.03 credit. And a 1201 credit. Okay. And I'm willing to take some ownership of those shares. I'll be watching closely. Chart alarms, Amazon 168. Let me see what my 185 put is worth. Right now it's showing about $3,200 of profit. Should I let this go a little bit more? This gap on Amazon, it's about an 11% gap. All right, I'm just talking out loud here. If anybody wants to see some other charts, let me know. I just have a lot of management stuff to take care of today, so I think I'm gonna start doing that. So I'm good with Amazon. I mean, 165. I take the profit that lowers the cost basis. I'll recalculate that out, and then probably. I mean, I don't know. Today seems a little wild and crazy. But I think if I put in a trade, let me see what my 210 call is trading for right now. So Amazon. So I have a collar trade on here. I have a September 20th 185 put. So September 20th, the 185 put right now is trading for about $21. That should be better than the intrinsic value. So a 185 minus a 165.20, $19.80. The bid price is showing about 21 to $21 and change. I think I'm just going to go ahead and take that profit and then re-implement another protective trade. So I'm going to see if I can close out for about 21 bucks. Let's go to this trade. All right. So let's go Amazon, put, sell to close. And I have the 185 put. Let me see if I can get, right now this bid is showing $20 and change. So let me make sure positions, the 185 put. Yep. Okay. Let's get a screenshot here. Okay. So moving this over here just for a reference, go back to my trade window, Amazon, expiration. I did a December expiration on that, Linda. So I did a 12/20 expiration on SVXY. So I'll share that in just a moment. Let me go back to Amazon. So I'll get the Amazon put. It is a 185. It's up around 3,200 bucks right now. So I'm looking at a buy to open on the put. So it's going to be a sell to close. I've got 2 contracts, and that's a September 20th expiration and a 185 put. So I should be able to get 20 bucks for this. And let me just do the real calculation. I've got the 185 current price. So 185 minus current price of 166.13. 1887 is actual price. If I can get over 20 bucks for it, that's pretty good. Let me see if I can get a little bit of intrinsic value to go with it. Let's just go 20 bucks. Take it. That filled at 20 bucks. Okay, so now I just successfully lowered my cost basis by, let's see, I put in a put. And that should be a 185 down to 166, close out for 20 bucks. I want to see what that put costs me. Let's see. So the nice thing here is I collected a $1.95 credit on my collar trade, and I just lowered the cost basis by a credit on the 185 by 20 bucks. So because I put in the covered call to go with it, I can keep that full $1.95 credit and have the expiration on the call side out to 210 and just leave that until that's like trading for literally like less than 10 cents. But I'm going to keep the credit overall, and I'm taking the profit. So I just lowered my cost basis. So added $20 credit on long put. Updated break even is going to be 117 and some change, 117.58. So not too shabby. If Google stays where it is, I need Google to stay below 168. Tesla is way out of the way here. Tesla should be fine. We're trading at 214. I've got a 230 bear call spread. I can show you that right here. This one's trading for nearly full profit. I'm just going to let this one go for the day. So positions, uh, not TIVA, TLT is starting to show some profit now. That's good, about $1,200 per account. Tesla. So I have the shares, but with those shares, I have a 270 in the money long put. I'm not really interested in keeping the shares, but I kind of am. In a way, it's like, man, I think I could flip Tesla for a quick win, and then still also take the profit on this 230 by 232.50, which right now is showing for a 3 cent debit, which I'm just going to let this one expire worthless. But if I take shares of Tesla, let me see something here before I jump into this. So let's go. Let's take a look at fundamental analysis. Um, Keith, that's a good question. Keith says, I wonder if hitting the button, the like button late in the session would be better for the algorithm. It could be. Maybe that's the trick is you're here, you're watching, you're commenting, you're engaging, and then you like at the end of the video. Maybe that's awesome, right? And a lot of, I mean, look, a lot of people on YouTube at the very end of the video say, hey, if you watched it this far, I appreciate you being here. Like the content, click that subscribe button, like the blah blah blah. I get it. Like, look, any thumbs up is great. If that's the first thing you do, that's awesome. But yeah, when you've got an engaged chat, maybe it's better. And so if you are, out there, just hit the thumbs up button for me. That helps out as always. Okay. Tesla. Do I want to take shares of Tesla? I'm gonna look because if Tesla's overvalued right now, fundamentally, I might just not do it. But earnings forecast grow by 17.6 or 17.06. Earnings grew by 1% since last year. Discounted cash flow, we're looking at a high PE ratio of 55.9 compared to its peers. But fair value shows 143. So I think I'm just going to dump the shares of Tesla, take the 75-cent hit on the bull put spread, but keep the $1.75 on the bear call spread and walk away with the dollar with 0 shares. 0. Although I would love to say I'm going to own Tesla and sit on this thing for the world. But I think there's other opportunities rather than, putting in. I mean, I can do the math on this. If I take the shares right now, I also have a ratio spread on Tesla that if I get assigned Tesla, I'm going to own the shares at like 192. So if this does come into that ratio spread situation, I could own the shares at around $192. That to me is like, all right, if I'm going to get assigned, I'd rather take it there and also work the cost basis down. So I think on the credit spread, I'm just going to let this one expire for full profit. And later in the day, when things got to settle down price wise, I will take my 270 put, close it out for intrinsic value, and dump my shares and take about a 75-cent loss because this one is a $1.75 credit. So that gives me a net dollar profit. And then I still have my 205 by 200 ratio spread and a 130 by 115 ratio spread, which are way down there. But those are going to be likely, like, I'm happy to take some profit there. Okay, so I can keep the gain pretty steady, and the same thing on Google. If we stay above or stay below 170 this week, Google, same thing. I got the assignment. I've got the 170, the 170 by 172.50 bear call. That's $1.75 trading for 30 cents right now. I want that to decay all the way down and get full profit. Hopefully it does. And then on the share side, I'm going to take the 187.50 long put and my 100 shares and close them out. So I'm going to take a loss of about 75 cents and a gain of $1.75, dump the shares, get the buying power back. To me, I think it's more important to have all the buying power back to then take the SVXYs and take the trades that I really like. Okay, so even for let me check on my SVXY for a moment here. SVXY here. And in my margin account, or my IRA account, so 7634. Let me check and see what this trade size looks like. So if I go here, 7634, if I did an at the money, let's go 54. See what this looks like from a margin standpoint. So 7634, $5,000 margin. I'll get the buying power back on Google and Tesla, so this one's not a problem at all. Um, yeah, I'll take this one. So I'm gonna go 390. See if I get like $4.25. Nope. Can I get $4? Give me a little bit of love, would you, Tasty? Got filled at 420. All right, I'll take it. And then 9072 and 8051. Okay, so I'm going to add that into my trade tracker. Um, 12/20 expiration, 54 sell put for 420 credit, and that is 7634, and all my IRA accounts. Boom. Okay, so I'm going to get rid of Google, get rid of Tesla, keep the $100 net profit. Don't take the shares. If I get assigned later, that's fine on Tesla, but that would be like a 192 ownership on a ratio spread. I should have some hedges doing pretty well for right now. If I check all the accounts here, so I've got an NQ hedge up $6,400. I have a gold play that's up $4,400. E-mini futures up around $2,700. Oil is threatening a little bit. I still like oil, but crude light futures pushing lower. It's a credit spread. It's not a huge deal, but my stop loss is essentially the line in the sand at 72.50. So I'll keep a close eye on oil, but it's not looking great. Gold, on the other hand, is up, and we're looking to retest all-time highs again. Silver responding a little bit, but still needs to play some catch up. Volatility is up above 20. This is another one you can probably end up like selling volatility if you're interested. Let me see if I can just do a bear call spread on the VIX. I am curious if I can, if it pays anything. If I go VIX, trade, let's go out 46 to 74 days on the VIX. If I were to do a bear call spread, nah. I mean, I'm risking 70 cents I'm risking 70 cents to make 20 to 30 cents. Let's see. I mean, I don't know. It's a little sneaky, right? I mean, coming back up to 20 and then fading back down. I mean, we've got to wonder right now, like if this gets a little nastier, does this, trickle up here towards 30s? If it's in the 30s, I'll probably end up selling volatility. But if it stays here, like this has been the whole year, it's just like high to low volatility. It's attempting. It's attempt. What temptation, I guess. But if it creeps up to like 30, 250, then I'll probably sell that vol. Right now, I'll trade SVXY, look at some opportunities on spies and Qs, which, by the way, let me see if I got filled on the Qs. And I know I'm jumping all over the place today, but there's a lot of stuff to take a look at, poke at, manage. Did I get filled? I did. Sweet. I did get filled on my $2 spreads. So I have a November 15th, and I want to say that I also have a December. Let me check and see if I have a pending December order. November was filled. Where's my December at? I thought I did a December expiration for the Qs, but maybe I was waiting for the 425. Okay, so I've got this one's filled, and the 420 by 415, that one's pending still. Okie dokie. So I know that I've been all over the place. I still want to get some other currencies and some instruments. Look, everything's down in the stock market. I actually don't mind it because I have been positioned for a, 10 to 1, 15 to 1, 20 to 1 payout if we have a really nasty spill anywhere between, 10, 15 plus percent. Those way out of the money puts are, lining up to pay really, really nicely. I'm not protecting profit yet, just in case there is more downside. A lot of these hedges are going to the end of August or into September, and I mean, the good thing is my bond move is going pretty well with TLT. Tesla, I'm going to go ahead and take full profit on by the end of the day. Google, if it stays below 170, that'll be full profit. I'll dump the shares, get my buying power back. Um, Amazon, I am taking the credit like, oh boy, Amazon is dumping hard. Let me see here. Do I need to buy another put? Do I need to collar another position? Let me see if I can close out on Amazon. So let's take a look at something here. Let's go accounts, positions. Right now, my covered call on Amazon has got to be trading like for nothing right now. Let me see. So it's the 12/20/210 call. 12/20. 12/20/210 call. So right now it's trading for about $2. I'm going to let that decay a little bit more. Trying to think. I mean, how much uglier does Amazon get? It's down about 20% right now. I mean, I still like the stock longer term. I'm just happy I'm trading options so I can lower my cost basis as this is dropping. So my cost basis now is 117, and that just gives me the extra upside of, I mean, that's another $20 a share of upside, which I am okay with. All right. Let's do a couple more things. I might be jumping in with A1 trading at 10 a.m. Yep. So I'm going to jump on and start another session here in about 5 minutes. So I'll do this. If you're in this session with me, hit the thumbs up button for me. Come back in about 5 minutes. I'm just going to take a swig of water. I'm going to jump back in and dual stream with A1 Trading and Nick and the team. And we'll continue. I want to get some charts. I want to get some currencies. I want to take a look at a lot of other stuff. There's just a lot going on as far as, assessing the whole portfolio, making sure that I'm not overlooking positions, making sure that my management list that I have right here, Apple, right? This is my list of things. So am I getting repairs like Pfizer today? Looks like I'm going to get it called away for profit. Tesla and Google, I'm likely not going to keep the shares. I'll take the dollar net credit. IWM and Qs and Amazon and Apple are going to be small bull put spread losses. KWeb and FXI, I'll keep an eye out. I closed Meta, closed MasterCard, and Qualcomm all for profit this week. And I've got some hedges on. Took a new trade on the SVXY, and I'll monitor that position. I'm willing to take the shares there, but that is where I stand right now. Okay, so if you want to come back in about 5 minutes, I'll be back with another session, take some more requests, and we'll probably talk a lot of gold. That's all everyone wants to talk about in A1 trading. What's gold doing? So obviously I want to do a little bit more in the currency space. So all right, come back in about 5 minutes, and I'll dual stream from my channel again. Okay, all right, I'll talk to y'all in a few minutes. Thanks, bye.